here it is, consumer price inflation, the measure most routinely used by government, by financial institutions, the one we feel in our pocket. We're looking at this, the month of May, inflation flat, 2.8%. We know what happened after the Ukraine war. We had then some second-round effects that was lingering in the economy. The Bank of England keen to get rid of them. They were heading down. If we cut it off there before Iran was attacked, that line was supposed to be down at the 2% target that the Bank of England set. The closure of the Strait of Hormuz, the impact on energy prices particularly, has pushed it up. What's encouraging about this is it's flat. Economists expected inflation to have started to increase again, largely as a consequence of fuel prices. We can see why it didn't. The contributing factors that left inflation flat, what contributes to it, and we can have a look at that now. You see, transport costs, that includes fuel prices, airfares, etc. They did go up, so anything on this side of the line is pushing inflation up, but all these negative factors pushing it down kept it flat. At the bottom here, the interesting one, food and drinks down. That's the lowest figure in more than a year. Food inflation has been really pushing prices up across the board, but meat prices have come down. So that explains why it was flat. Now, all of this feeds into what the Bank of England does next. In fact, they meet tomorrow. Their rate-setting committee, chaired by the Governor, Andrew Bailey, will meet. In fact, they meet today. They announced their decision tomorrow. Rates had been coming down. They went up to counter inflation. They've been stepping down. They've been on hold. The war in the Gulf has given the bank literally pause. This red line is what markets expect to happen next. You see it's flat here. That says markets, I think it's nailed on. They will hold rates at 3.75% tomorrow. They have been trying to hold that position. They haven't changed since the war began. They've essentially been wanting to wait and see how bad would the inflationary impact of the conflict be. You can see markets think there may be cause for rates to go up, perhaps another quarter point into next year. If it goes on, but with a peace deal potentially being signed this week, they may not be happening. What underpins all of this is the oil price. Let's take a quick look at that. This is Brent crude. It was trading at around $60 a barrel, really cheaply before the attacks on Iran, up close to $120 a barrel at the start of that. It has dropped down since Donald Trump and the Iranians reached what appears to be a deal, now below $80 a barrel. The lower that goes, the more inflationary pressure eases. That's good news. This is reflected around the world. Not much unusual out of the ordinary happening in the UK, but it's good news for the government. We heard from the Chief Secretary to the Treasury this morning, and she welcomed it.
This is welcome news that inflation hasn't risen as expected. What we are still seeing in these numbers is general inflationary pressure from the war in Iran. We've consistently called for de-escalation, and the news about peace talks is very welcome. What we need to see now is inflation returning to target at 2%, and we need to continue to make every effort, as we are doing, to protect households and to try and lower the cost of living.
Well, Paul, thanks so much for that. Definitely encouraging. And as you said, we'll see what the Bank of England says about it all tomorrow at midday, which we'll have on Sky News as well.